And there it is, the closing bell at the New York Stock Exchange. Not the strongest close of day for the U.S. stock market. The Dow Jones was up and down throughout the day. It finished down, you see there, about 187 points.
And the NASDAQ and S&P ended the day relatively flat. Both closed around 0%. Joining us now, J.D. Durkin and Courtenay Brown. J.D. is the host of financial news website TheStreet. Courtenay Brown is an economics reporter for Axios. Thank you both for joining us. J.D., I want to start with you, and I want to ask about the jobs report that came out today, showing some slowing growth there. But what did that impact? What impact did that have on the markets?
I think on a day like today, when you watch the major indexes kind of go back and forth from red territory to green territory, listen, it's been a shortened holiday week, a lot of data points for investors to digest here. This is, in the estimation of a lot of analysts I spoke with today, a bit of a disappointing number. Now, historically speaking, 209,000 would be great. I think any White House would celebrate it. In fact, this White House did. We heard from the president a short time ago.
We sure did.
But we have to remember there were downward revisions announced today for the previous 2 months, for April and May. So you take 209, that figure today, it's actually more like 99,000 net because we lost 110,000 jobs that we thought we had. But the fact that we are seeing wages steadily reaccelerate, match with the fact that unemployment comes down to 3.6%, it is basically a foregone conclusion in the estimates of most market observers come July 26th. The central bank will be very quick once again to ratchet up interest rates after pausing last month.
Yeah, Courtenay, let me ask you on that point. The Federal Reserve has previously signaled more interest rate hikes are coming. Given this data that we're seeing, what's your thought on that?
Yeah, that's a promise that they're most likely going to follow through on. The headline number for the jobs report was a little bit weaker than economists were expecting, but you look underneath the hood and there are some really strong indicators that this labor market is still quite hot. Wage growth is moving up at a still rapid pace, up 0.4% in June, the same pace as May. That is great for American workers, but it's a little bit troubling for the Fed that wants to see wage gains kind of come off that kind of rapid pace. They're worried that's going to fuel inflation. On the flip side, there was not very encouraging news on the supply side of the job market equation. In the early months of this year, we saw workers re-entering the workforce at a really strong pace. That's kind of cooled off in the spring and in the summer months so far. The Fed was really hoping that more workers would join the workforce and help kind of ease all those anecdotes you hear about labor shortages. So for the Fed, this is definitely a report that shows the job market is still moving on at a very quick pace. And in their view, that's a troubling development.
Courtenay, I want to talk about the weather and specifically the impact of this week's record-breaking heat on the economy. There's an estimate that excessive heat currently costs the U.S. $100 billion in losses annually, and climate change could double those losses as soon as 2030. So how concerned should Americans be, and is there anything that can be done to diminish heat's impact on the economy?
In the conversations that I have with economists and policymakers to a certain extent, the climate change is a topic that's moving further and further up the list as far as what it's going to mean for the U.S. economy, what it's going to mean for inflation down the line. These estimates are, sound really scary, but we have to keep in mind that we are in a $27 trillion economy. So while we may have to get used to more climate-related effects to the economy, it's too soon to say exactly how large those effects are going to be and what the impact on economic policymakers like those at the Fed are going to have to react.
I'm wondering, J.D., in the short term here, did those excessive temperatures affect U.S. stocks at all? Because it really was intense, this heat all across the country.
Absolutely. Perhaps I would argue a little too soon to tell, but it will be really interesting to look at earnings reports and hear guidance and a lot of scientific research well into next year. This could be the sort of thing economists get together and say in terms of infrastructure that may have been crippled, in terms of rising health care costs, in terms of potential death for individuals or people who have faced heat stroke. As a result of this, there could be pressure that gets put on the system. That was the case back in Europe in 2003. More than 70,000 deaths put incredible pressure on the healthcare system out there, and countless more injuries. We saw this in the Pacific Northwest a couple of years ago. More than 1,000 American deaths directly contributed to that as well. And so I think it remains to be seen. I would argue maybe we don't have the evidence just yet to know the impact on the indexes the last few days, but we could look back at this at some point down the line and say there really was a significant economic toll we did not realize at the time.
Yeah, because you think about it, JD, I mean, a lot of people work outside in these, industries like construction, right, and delivery workers. I mean, there are a lot of aspects of our economy that are tied to these jobs where people are required to be outside. So it'll be interesting to see how that develops.
And if I can add, construction was one of those sectors that actually performed really well for this last jobs report. There's a seasonality element to that, and now you add on how difficult this heat wave is, and maybe, that's a great point. This could be something we see the impacts of down the line. Yeah.
Meantime, Courtney, let me ask you about Threads. Okay, are you on Threads? I'm on Threads. I think we've all established here. All of us here at the table are on Threads. Are you on Threads, first of all?
I am on Threads, though I am reluctantly on Threads.
We're all reluctantly on Threads.
What I will say is that Jobs Friday is a big event on Twitter. Econ Twit, Fin Twit. We all are, tweeting away about the jobs report and details of the jobs report, aspects we find interesting. And because of the infrastructure of Threads, it just wasn't the same vibe over there. It just really didn't have the Jobs Friday Twitter vibe. Obviously, that's a very anecdotal experience on my end. But I am curious what this platform is going to look like in the months to come, whether there will be a chronological feed, whether you will be able to see threads from people you follow. I'm curious to see how they're going to develop the product in the months ahead to be more of a competitor, if you will, to Twitter.
Yeah, because, Mark Zuckerberg, head of Meta, which is behind Threads, said that 70 million, which is astounding to think about, 70 million users, he said, have signed up for this app. So, the question is, how concerned should Elon Musk be?
Yeah, I think this is definitely a point of concern, something Elon Musk will be concerned about, especially when you think about, what the platform will look like in the months ahead, whether they add advertisers onto the platform. I mean, that's how Twitter makes all of its money, right? Advertisers. Do we see advertisers start to flee from Twitter to Threads once and if they open up that capability? So it's definitely something to watch.
JD, this seems like a pretty successful launch for Threads. Did we see an impact in the market?
Not really, and I spoke with analysts today that cover Meta as a stock very closely. It's a stock that has performed incredibly well so far here in 2023. It is one of these big 7 or 8 names or so that has really outperformed the market. Didn't really seem to move a lot. I think I speak on behalf of everyone who says, I mean, do we really need another social media platform at this point?
It could be a fresh start, though, right?
And it does. It has that new car smell feel. Yes. When you're on it. You're like, hey, the layout is really cool. Yeah. What is this? Like, we're all engaged with it. Yeah. A few weeks after, I'm one of many people. I've lost a lot of sleep the last few nights because I've been busy on Threads the way we used to tweet. And for those of us that are journalists, it kind of has that old school energy. Courtney's right. Today for Jobs Report didn't quite have the same energy that we're used to. That's a great point Courtney makes about advertisers. I personally will be looking to see, how does Gen Z use an app like this? And I say that because Gen Z has not really gravitated towards Twitter. They love Snapchat, they love TikTok, they love Instagram Reels. If Gen Z and that impressionable demographic for advertisers really starts to warm up to this as a new platform, they could really be onto something. But it'll still be a while before they're anywhere near the numbers of Twitter's daily active users.
Well, we're going to be talking about Threads a lot more in the days and weeks and months to come. JD Durkin, Courtenay Brown, thank you so much for joining us.
Thank you.
Thank you.